The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. And let me just get this across to that side over there. Yep, there we are. Okay, so great programming earlier today. Let's hope we can keep that going. Oh, by the way, I did the 9 o'clock show for Larry. Larry's out this week, so it was my pleasure to be doing that for him. Couple of things going on. Dow's down 28 at 20,946. S&P is down just a point at 2395. The comp index is down 11 at 6109. Let me just say that again. I'm not sure that you probably got the gist of this whole thing. The comp index, this is the NASDAQ 2,000 or more stocks. The composite index is down. It's down 11 points at 6108. Let me just let that sink in a little bit there. It's down. Very unusual. It's been the leader. And we've got, this is going to be very interesting as well, because within the context, we're only down 50 cents in the June contract of the E-mini S&P. Held the 9-period moving average. I've got one little signal that says, I've got two signals that say that this kind of topping action, that unless within the next day or two you just spiral into the 24.11s, it's at 23.93 now. The high was made 3 days ago at 24.0375. Was a Chapman Wave 5, I believe. Still calling it an E/C in the Chapman Wave count. NAGD is still very strong, but just starting to narrow the histogram. That is the difference between the slow-moving average, the 9-period moving average, called the 9 differential, starting to contract a little bit, but still very strong. The slow-moving average is still rising. The slow stochastic is at 88%, starting to pull back, but still over 80% is very good. So what we'll be looking at is some kind of a news-related crunch to the downside. It has to be a bad news event. You do want to see the VIX index, which is at 979, down 17 cents. You do want to see that moving into the 11s, because if it doesn't do that, it just says more buying is extant. More money is there to be buying. But look at the way the weekly chart of the E-mini is. Look at this cup formation. It did go to a new all-time high above the 23.97.25 March high, but the MACD still hasn't crossed positive in all this time. It is 1, 2, 3, 4, 5, 6, 7, 8. Now I keep having to count because I can't believe it's been 10 weeks with no new high in the Dow, but there was a new high in the S&P. No new high in the IWM, no new high in the, I better check this out, NYA.X, that's New York. Nope, no new high in the New York Stock Exchange either. So this is a very important moment. Within the context of all the different indices, if we look at the IWM, it is very weak. It's way below the high that was made on March the 1st, just under 142. It's at 138.58. But if you look at the QQQ, and this is going to be so important, the NASDAQ Power Shares QQQ trading vehicle for the INDX 100 made a peak D in the 120-minute chart. It's made a leg D. It could be a peak D if there's no new high today in the daily. It's leg 5 up in the weekly chart, in leg F to the upside. Yep, it could have recycled. At this point, I have no reason why not just to call it an F. I don't have to say an F/B because F is good enough right now. But a very strong leg C in the monthly. So my assessment for the markets generally, looking out in 2017, higher highs are to come. Shorter term, we've had a 10-week consolidation in most of the major indices. It's been led higher by the Qs, and that's because suddenly you've got a stock like NVIDIA, I typed it in the wrong place, NVIDIA, which helped the semiconductor index, NVDA, spike to a new all-time high. NVIDIA is up 14.59. All-time high is 120.92. Back the week of the 10th of February. I was sure that this is going to take much longer to consolidate. Instead, earnings report today, very good. Spikes up to a leg C in the daily. Holding very well so far today. Good sign. And what it's done is it's really spiked the SMHs. SMH, not SM, what is SM? SM Energy, interesting chart. SMH has got a little doji candle right now. Inner leg D opens at 82.23, has a high of 82.50, has a low of 81.92. Trading night right now at 82.21, within 2 cents of the open. MACD is still very good. Stochastic starting to turn down, but still at 90% is really strong. Unbalanced volumes weak. We're going to be watching this. It just hit a channel resistance in the weekly chart, but I've got it as the G/C. And we'll see if this MACD is going to turn cross positive. Right now, it is at 311, 16,301. Yeah, it's still negative. It's close to turning up, but it hasn't yet turned up. And the stochastic's at 83%, and that's good. So what are we waiting for? We're waiting for three things to happen. Let me show you. Or INDU. No, I want to go to the VIX index, VIX.X. The VIX index is at a multi-decade lows, not low, because the last low was in 2006, December, at 9.59, and then 9.39 was the low of 1993 in November. So we've gone down to 9.56 yesterday, and it's kind of holding. But really, until the VIX index starts trading in the 11s again, with the Dow pulling back and holding down 80 to 110 points, the S&P has to be in sync with the Dow, down about 11 to 12 points. Until that happens, I don't think we're going to do anything but chop to the side. But even more importantly, I'm anticipating that the NDX 100, let's go to the QQQ because that's the trading vehicle, is going to begin right now. Look, since the low, let's go to the low of the 13th of April at 130.38. So you've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 candles. Now there was 19 sessions, of which 1, 2, 3, 4, 5 were 20% were red candles, but nothing serious. Today's about the deepest you've had since that one-day pullback. You made a new high, but you still had a red candle back on the 19th of April. So until 137 support at the 9-2 average is pierced and it starts to close twice out of 3 days, 2 consecutive days out of 3. Below that, I have to look at this and say that the process of making some kind of a top is unfolding right now. But we haven't got the top yet.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So I just want to show this 2-minute chart in a buy mode. Went to a peak, going to a leg D. It could be a peak D right now. Getting a little toppy at 23.94. What I had said earlier when I did Larry's show is that 23.96. It gets to 23.96, and I'll show you in the 10-minute chart right here. That was a 2-minute chart. That's a breakout. So that's a 2396 starts something completely different, because then it wants to try to get to the 2398. So we'll see this. This is a very interesting market, to say the least. Just wanted to show gold is it's up 5. I don't see anything yet for gold. I'm really concerned that the peak C in the weekly chart has broken the up channel support, Chapman Wave inside track support level. It really has the impression, based on the MACD, that if there is a move underneath 12.12, it's at 12.20 right now. If there's a move under 12.12, it's going to test the double bottom at 11.97 and 1200 that was made back in the week of the 10th of March and 17th of March. And then the MACD will cross negative. So you want to see some kind of a bounce. You want to see the MACD, the moving average convergence, divergence, the faster moving average, the 9-period differential, that green line not close below, but bounce up. And you want to see the stochastic at 66, kind of get to 72%. That's the best thing that I can see for gold. But if it doesn't do that, there's a problem. And one of the things I spoke about when I did Larry's show is that silver has just gone straight down. It hasn't even had a bounce. This is the first time you're looking at the flat stochastic at 2%, 2.38. Think of that the other way around. If this was the stochastic was at 98.7, I'd be saying this is fantastic action, and you should see higher highs until the stochastic starts to break down. So this is saying, be careful. Upside at 16.53, the 9-period moving average resistance. It hasn't even crossed the 9-period, it hasn't even touched the 9-period moving average since it broke down on the 18th of April back in the 18s. Once it kind of the next day it wanted to try to touch the 9-period moving average, failed, and ever since then it hasn't even got close. And that to me is saying not a good sign. That's what it's saying. And the dollar DXY continuous contract. This is the dollar index, holding very nicely at 99.58, up 3 cents, just holding well. But it did break that uptrend support line in the sideways V-shaped pattern, that wedge pattern, and it did break it for 2 weeks, and the third week, this is the third week, it's gone snap back again. The stochastic is trying to turn around at 18%. MACD's improved, but not great. So let's see what happens, because the dollar has tremendous resistance. 99.84 is the 9-period moving average in the weekly, but really what we're looking at is this downtrend that I drew at 100.50 in the next 3 to 5 sessions. If it can break above that, that's very important. If it cannot, it's just going to go to a lower low and make a trough D. So we're looking at the dollar and saying it's held okay, not good enough. It needs to really rally. And if you look at the EUR-USD, look at this. Gone to a peak D daily, pulling back quite sharply. Peaks, leg C in the weekly, holding well, but showing some shorter-term weakness. USD-JPY. This is the dollar, Japanese yen currency. Very strong leg E to the upside. Isn't that interesting? The currencies have really separated their ways. There was a period where USD-JPY was following very closely the direction, not the percentage or anything, but the direction of the dollar. Now it's doing that, but almost on its own. It's hit the 200-period moving average in the weekly, had a really nice bounce, broken some downtrend resistance line right there. Hey, so far this is good action. Yes, and we'll see where this can take us. What I am looking at is in leg E, getting a little choppy, 114.12. Yeah, I can see 114 right there, 114.54-ish area could be resistance. Has to hold 112.79 because that's the 9-period moving average support in the daily. I am forgetting one thing here. High-grade copper is just stuck at 2.49. I don't like this because the weekly chart has made an arch formation. It's really close to testing the left side low of. Oh, I got to go to Bob. Don't forget Bob. Bob in Framingham. How are you? Sorry, Bob. I was just about to go to you and I got carried away. When I see charts, I cannot help but keep analyzing. But here you are. How are you?
Well, good. You're a very passionate man, Basil. So when you get carried away, you might wait until you come back. Yes, Umbrella. It's doing very nicely today. It's been a good day for Amber.
Very good. Let me just give a little preamble here. Amber is Amberella Inc. is trading at 59.58, up $1.60, up 2.76% in leg E, having walked the 9-period exponential moving average, having the MACD very strong, stochastic at 93% is good. On balance volumes getting a little overbought, but still very good. It hasn't taken out the left side high of 60.68, made on the week of the 3rd of March. Still acting very well. And I have to congratulate you. You have calls attached to this, and they must be doing beautifully.
Yes, they are. The question is, I'm looking for targets. It seems to be leveling off here. It's been doing that for a while after coming up to a peak. But since I have pushed through that number of, let's see, look at it, 58.37, and we're definitely up and above that and holding above that, is the next target that 60.68, at which point it's time to sell it all?
Okay, give me 1 second. A, B, C, D, D. E, not sure if that's an F. Yep, and an F. And then what does it do? It breaks out. So that means it could have recycled. So A, B, C, yes. Okay, so I'm calling that an F, and then I'm calling this a brand new, oh, and that's a G. All right, here we go. This is A, B. It's in leg C right now in the 120-minute chart. I have to double check because I want to see that that low was not taken out. 55.78, 55.82. Aha. Okay, either way. All right, I like it. I think it's acting very well. I would not be surprised if it has one little kind of flurry to the upside to complete the 120-minute chart after a little bit of a dip. Now, what do you have left? We had spoken a little earlier, about 5 sessions or so ago, maybe it was a little more, a week ago, and I said to you, if you want, you can take a little bit off, and on the next pullback towards the 9-period moving average, you can put it back on again, means you've taken some profit, and now you can play with the house's money just a little bit on one of your or part of your contracts, and now it's gone to a D, and it's gone to a leg E. So what do you have left, and what is your thinking about what you would like out of this.
Well, you've probably seen those movies, Hollywood movies, where they have the crazy gamblers at the roulette wheel and they say, let it ride. I've decided to say, let it ride. So I'm still all in.
Oh, you are? Okay, very good. So this is what I'm going to... but wait, you've got June and July calls? Or was that on Mercury?
My AMBA calls expire in 9 trading days, a week from Friday.
This month. Okay. So here's what I'm thinking. You're looking at maximum premium that you've seen this morning as it hit 60.05, and now it's at 59.50. I'll talk about that in a moment, what I think you could squeeze out of it. We'll come back with Bob in Framingham. We're looking at Amberella Inc., trading at 59.56, and we'll be back because Bob has calls and he's doing well. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back, and there's a 2-minute chart gone to a leg E, and at this particular point, holding the 9-period moving average, getting to that 2396 area, a very critical level, at least on the 2-minute chart intraday. So Bob, this is what I'm looking at. What I had drawn for you before was a cup formation, but I never really concluded it. What I'm using is the left side high of the 1st of March at 60.68, and then it comes down, tries to rally and fails, but there's a candle that I use as the midpoint because visually I could see nothing to use the midpoint, the most obvious midpoint, which would be the low that was made on the 18th at 49.49, it just takes too long to the right side. So I use the candle of the 5th as my fulcrum, as my midpoint, as my plumb line, and I went to the right, and that takes it to tomorrow, the 11th, to try to get to the high that was made at 60.68. At that particular point, within the high that was made today, I just better type that in so that I know I keep talking about the right thing. 60.68 was the high of the 1st of March. 60.68, and we've got 3,117. So that was the high that's really the target that I would have. So this is what I was going to say to you. Even now, although it's pulled back a little from the high at 59.35, the premium is the most that you've seen. If I had to visualize it as an expansion of premium over the price, the differential between the option trade strike price and the current configuration of the daily, I would visualize that there'd be a fan that's expanding, and that the premium is a little less than it was about an hour ago, but it's still very, very high. I'm thinking that you would have to be moving into the 60.30 area or 20 area to get to surpass the premium that you saw earlier. This is what I'm thinking about the option. So this is the area where I personally would start to take something off. I'd say, look, the left side goal has been almost met. The premium is probably very high at this time, unless it gives back another 80 cents. That'll give back a huge chunk of premium. Right now, it's still good. All you need is one. Let me just do this intraday. Let me go for this as a 10-minute chart, and I'll show you something here. We're looking at AMBA. Yes. So that opening gambit, the first 30, 40 minutes, where it went from a low of 57.40 to a high of 60.05, and it's still holding very well. If this thing just has one little pop from 59.35 to 59.63, you'll see all that premium come back again. But if it doesn't do that, you're going to see the premium start to shrink. And that's just on a daily basis. So here's my recommendation. You can take it or don't take it, but if you want my opinion, I would take some of the options off right now because it's so close to one of the targets. However, I would absolutely try to keep at least maybe two for another week. And the only reason being that you might be able to add back the two that or whatever it is you take off now, you could add it back. Let me go back to the 10-minute chart. Yeah, you could add it back at 59.28. You get it back at 59.83 or 59.63. Most of today's premium will be taken, not all, but most of it will be taken out, and you'll be able to have another run to the upside to at least test, because I think it's going to try to do that, is to test the 68. I keep forgetting what the price is. 68. 68. Yeah, 60.68 level. So that's just my thinking right now. It's in leg E. It's acting really well. The technicals are good. But you're playing options and you're playing premium. And you've got a fantastic gain right now. I wouldn't hesitate to at least take something to reward yourself. But you could even think, hey, it's still acting very well. Weekly is still pretty good. 120-minute chart probably needs to go to a leg D. I want to put those back, and you could just name a price and put them back. That's the way I would do it. Now, if you want to hold it through, you want to see a break above 60.68, and you want to see it hold between 60.20 and 59.80 into Friday. If it starts to break down, if it breaks down and you're looking at 58.20 to 57.50 on Monday, a huge chunk of your premium is just going to disappear. I don't have to tell you. You know how it is. It'll be real quick. This is where the premium shrinks and expands really quickly. So you're in the sweet spot. That's just my recommendation. Take a little bit off, get back in, but try to keep a core position and see if you can get it. Really what you want is a close on a weekly basis above 60.68. And that'll improve the weekly chart a lot.
Yeah, I am going to sell some here as soon as I get off the air with you. One thing is fascinating about this. You take a look at the option chain for this front month, and the whole option chain is very sparsely populated, with the exception of this strike. I mean, something like one contract, 30 contracts, 70 contracts, with the exception of this strike price where there are over 2,000 of them. And up at $60, there are 4,000 of them. So there are some big players doing something at some very heavy-duty numbers here. And since they haven't sold any of their stuff, I suspect they're waiting for something, and they're expecting it to happen within the next week and a half. I mean, because their positions have premium left in them, they will have that ability of rolling them over. But still, something is afoot. And next week is earnings for this company. So
Bobby, if earnings if we're still waiting for earnings, you might want. Just before the day before earnings, or even the day of earnings, you want to get as much as you can out of it, and then just because you never know, I would hold something into earnings. Just hold it. If you've got a huge profit, then take some of the profit, keep it in the options, and just see. I mean, I'm thinking here that the earnings from the chart formation might not be that great, but if they are, you got yourself a really nice spike. So, but you don't want to give up the gains. These are good gains that you've got, very well thought out. So I don't actually want to mess your trading plan up. I'm just saying my gut feeling would have been today on that very big gap in leg E, very close to the target of 60.68, at least from the left side, right side price time match, which has until tomorrow. Then I have to expand it out a little bit to the right, but it's pretty much met all the targets. I think that's the way I would play it. And your Mercury, MRCY, if you still got those calls, this is a nice candle today. Well, it's a nice candle today. And if it takes out, now that's got a left side, right side price time match. It's a tad, it's like a day late. But if it takes out the high of the 8th of May of 40.95, that really improves it. Then you've got your target line that says 41.21 would be the very next level of resistance. Hey, congratulations. You're doing fantastic with this options stuff.
Okay, thank you.
Thank you very much for calling, Bob. Good luck with that. We'll be back, folks. Dow's down 16, S&P's on. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. I got to do a couple of things because my email was out for a couple of days. That's the TFNN email. I just didn't get some of the questions I had. Jim, I try to reply to you. You know, I have trouble when I send an email back to you. It comes zipping back to me saying can't deliver it. So the question was SCHW, Schwab, Charles Schwab Brokers, trading at 40.02, down 42 cents. It's made a peak C1, C2 double top. It could bounce a little bit more. My real issue here is the weekly chart and the monthly chart. Peak E in the daily, peak E in the weekly, peak D in the monthly. I'm looking at the brokers for the next move. I discussed this in my webinar. I don't think they're ready yet. I think they need to pull back a little more. So I'm going to say that you've got Charles Schwab, yes, and peak C, because that's where it was when you emailed me. And then the peak C was at 40.82. Then yesterday it went to 40.81. That's like, there's no question in my work. That's called the peak. Let me edit. C1, C2. Like a double top, like as if it was a peak D. I usually put a plus sign there and I expect to pull back. But if MACD and stochastic are still holding well, you could go to a D. But what I'm really thinking is that if I'm correct, that the 8 to 10 week consolidation in the key indices, and I have to say it's even continuing in the S&P, even though it made that fractional new high, is going to see the QQQ series start a consolidation very soon. That's where I'm expecting that the Dow and the S&P actually hold quite well, while the Qs start to come down. That has to impact the SMHs. And as you know, for my subscribers, we've got some what I call under the radar stocks that really are kind of independent. I think they're independent of the market. I hope they are. So I'm thinking that Schwab is one you want to keep on your list with some of the other brokerage, and also the commissions are just being taken down all the time by Fidelity, etc. So I'm just thinking that hold off. In the next big move to the upside, when the monthly charts really start to pick up, maybe mid-year, a little bit later, that's where I think you're going to see the public come in, and you're going to see these Schwabs, etc. So I agree. If you want to start a position here, just say, you know what, at 40.08, I put $4, 10% on a very small position. I'm prepared to risk 37.25 is the 200-period exponential moving. You can even dip a little lower. Yeah, I don't think you got the right idea. So over 3 points, 4 points, I'd say if you want to start your position here, because other things can happen, we could just spiral up into the 42s before you know it. Maybe, yes, I agree, because that's your thinking, and I'm kind of agreeing. Just start your position here. This isn't the real position. Real position is if we come back, slide under 39, we're going to have to assess whether or not we see an arch formation in the weekly that holds or just undercuts the 37.16 and then bounces back. That could be the entry point, the real entry point. So yes, you could start. You could even wait a little bit. I'm with you. You've got the right thinking. If you feel comfortable, just starting a little position, I don't see any problem with that. That's not the real position, but that's a starter position. Now, a couple of things that I wanted to go to. The next question, well, it wasn't a statement. I think it was a question. I hope I'm not skipping. Oh, yes. So, Al, you talked about rhodium. I don't have the rhodium chart. I'm going to try to figure out what it is. And you say busted bubble. Let me look at it. I want to have a look at this because rhodium, I never trade and never hardly look at it. I know it comes up once in a while, and then I have to go perusing through all my stuff to see if I have it. Next question was, and thanks, Nick, for that information. Great. I'll be looking at it a little later on when I have time. George just wanted me to say that the earnings are very poor on VSI. He had spoken about it as something he was looking at, expecting that maybe there was going to be a change. It plunges down 25% at 14.25, down 4.75. And he didn't really have a position at all. He says, I got my eye on it. Some things are maybe changing. Let's see what happens after the earnings. Earnings are lousy. And that is Vitamin Shop really needs a couple of pulls to get going here. And it's got a real problem. It's 14.23, down, 25%. Whoa. So the next question I had was JP Morgan. We always get the JP Morgan question. JP Morgan right now holding quite nicely. My thinking here, it's almost the same as Schwab. It's got signs that it's trying to form some kind of a base. The weekly chart is not great, but it's trying to hold. I'm going to say I'd like to hold off a little bit on JP Morgan. Now, someone had connected I'm not sure who, if it was a little later on, the interest rates. Well, I've got the 10-year at 23.83, down 24 at a peak C in a gray C because it's way under the previous highs. I think it's almost the same thing. I think that rates are just stuck for now. And if we see if the market does start to decline, that's when I think the TLT will start to rally in bonds. But at this point, you're just seeing a little bit of a bounce. Maybe it needs more work. I'm watching the TLT for clues. I'm watching the VIX for clues. I'm watching gold and dollar because I think the elves are just stretching themselves, waking up, getting ready for something. I don't know if it's there yet, but I think it's going to happen very suddenly. It could happen within a few days. I did want to do this. Remember I said that I'd look at wheat. Wheat's got that A pattern, straight up, straight down. Got to be real careful. If I look at corn, that was a slightly different one. It was trying to hold, but still shows no strength. And I did sugar when I did Larry's show earlier this morning. And I said sugar needs to break above yesterday's high. And it's got a 1-to-1. I don't want to take time now. I did a whole thing on it in Larry's show about the Chapman wave 1-to-1 parallel 1-to-1 it's called. It's done perfectly. It's gone to the 15s, which was my target. We'll see. Is sugar now going to have a bit of a rally? It really needs it. And this is the first time that the MACD is quite good. Stochastics churning up. On-balance volume is coming into focus. And that says, what I'd say just real quickly is it needs to close above the candle high of the third, which is 15.91. It's at 15.64, up 20 cents right now. If it does that, immediately the high that was made in the second of 16.49 becomes a focus. If it fails and it takes out yesterday's low of 15.36, horrible action. So this is very important right now, I believe, for sugar. I wanted to also do lumber. I don't know if I can do lumber. LB, I can never get, I have to get LBV. I don't know, let's just grab a letter. LB, all right, no, LBJ, huh? LBM. All right, not getting it. Lumber, I want to do something with lumber. I won't right now. Live cattle, just wanted to jump into these things to show a couple of things. Live cattle has made a peak C and there's a sharp pullback. What I really wanted to look at was Bitcoin. I'd said, I had a question. Where is this? Is this today? Good grief. This is today. It was yesterday. It closed at 233. The high was 234. This is Bitcoin Investment Trust. And I said, I was asked about it by some subscribers, and I said, I'd be taking a little bit off, but you can do this, that if it gets to 2, what did I say? GBTC. Oh, I did it in a separate chart. I'll try to find it because I think it was really, I believe it was really helpful, and in fact I think it was a good analysis. So let me do this. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 18. S&P is unchanged. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So the day is young. 296s. If it if S&P any 2-minute bar, if it goes above 296s, 2396s, that's really important. Right now, I've got a peak E gone sideways, and the support is now at 2393. Break under 2392. A break under that at any point in the day says be careful because it starts to see a very weak close. So what I'd said to subscribers to my opening call for those people who actually had GBTC, which is Bitcoin, the trading vehicle, I said I was pleasantly surprised that a couple of subscribers actually had GBTC, Bitcoin Investment Trust, and asking what to do right here. My answer is congrats on a fantastically quick whopping gain. I would take 2/3 off right here. This is me personally, right? And the other 1/3 would have a stop of 222, raise to 228 if 242 is hit. GBTC could reverse as sharply as it went up, but if you want to hold a core, if bought from much lower down, this alternative currency phenomenon could see the 300s sometime. Even if it were to slump back to the 160s, then take quite a lot off here and then just hold the call for a long-term buy and hold. As a trader, I would be looking for support in the 170s to maybe buy. This is us for my opening call. Well, that was there. Look at this chart. Another candle just like that, huge. up 250 at 257, up 24. I haven't changed my thinking here, but if you only took off a little bit and you used the raised stop because it went to 242, now I'm saying to you at 257, I've got a lot of indicators here that say peak D in the 120-minute chart. Please take something off if you haven't. You can handle all the rest you want, any way you want, but I'm just saying to you, that kind of profit in so short a time, in such a speculative alternate currency, be a little careful. But if you want to keep your core, I have no problem with keeping a core from much lower down. Meantime, have a trading position. Take something off and say, hey, I'm going to put it back at 194 now, the 9-period moving average, and see what happens. All right, I got that out of the way. A couple of quick things. So let's go. So those are the bank stocks. The next thing is crude oil. Is this a low? Let's go to USO, which is United States oil. You know, it's gone from the range of the mid $9 to the high 11s and then back again, up and down and up and down. As a risk reward, you know, I think that you need to see the dollar pull back quite sharply just to go to crude oil. This is tough because it's a really nice candle today. So I'm going to make this suggestion. Crude oil, this is a very nice move. If it closes anywhere near the 47.50s or higher, I like that. I think now I've got the stochastic moving up, the MACD is turning around, it hasn't turned positive. If you want to go to, say, USO, and you want to just start a position, USO, this is a B, a gray B. If you want to go to USO trading at 990 right now, I'd say, okay, buy a small position. I wouldn't get carried away because this keeps failing, making lower lows. But this is the first real nice turn that I'm seeing in the technical. So yes, at 989, I would still have a stop. I wouldn't go to today's low. I don't want it to break down that far. 980 right now, 989, I'd have a stop of 975, something like that. And if by tomorrow, it's trading above 996, preferably above 1003, just raise the stop. Would I add at that point? I would have to wait until my show to actually tell you that. But yes, you could start a position now, make a fairly tight stop, and just treat it as a trade. And a trade has a target of 1017, the high of the 2nd of May. Next quick thing that we wanted to do is EOG. EOG, I think it's a gold stock, EOG. EOG. Oh, nice candle. Yeah, this is nice, and this is the same situation. A little bit, way better weekly chart, ABC, DE, made a peak, E and pulled back. Yes, EOG at 95. If you want, you could start a position here at 95, 99. I'd watch 93.70. If it takes at 93.70, that would be my stop. Give it $1.25 stop right now. Let's see if it can rally for most of the week. Sorry, I couldn't get to some of the others. I'll be back tomorrow. Have a great day. Thanks for being here. Dow's down 21. We'll see what happens by the close. And I will do an update.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.